All right, today we're going to dig into a massive, high-stakes decision by a company that's almost definitely in your kitchen right now, Kraft Heinz. But, this isn't really a story about ketchup or mac and cheese. It's about a huge question that giant companies everywhere are wrestling with. In today's world, is it better to be absolutely massive or is it better to be super focused? For Kraft Heinz, the answer to that question could literally tear their empire apart.
Okay, so let's just start with what we all know. You've got Heinz ketchup, Kraft mac and cheese, Oscar Mayer, Philadelphia cream cheese. I mean, these aren't just brands, right? They're practically cultural institutions. They're staples in pantries all over the world. They scream comfort, tradition, and just a huge presence in the market.
But here's where it gets really interesting. Despite having all that brand power, all that recognition, the company's performance has been, well, a huge letdown for its shareholders. The magic you see on the grocery store shelf just has not been translating into magic on the stock market.
And that really brings us to the mystery at the heart of all this. It seems totally backwards, doesn't it? Why on earth would a company this iconic, with these powerhouse brands, even think about breaking itself up? Let's get into the details and see if we can figure this out.
So first, to really get what's going on, we gotta rewind a little bit. See, Kraft Heinz wasn't just born this way. It was forged in this mega merger back in 2015 that created an absolute behemoth in the food world.
And when I say behemoth, I really mean it. We're talking about a company that pulls in around $26 billion in revenue every single year. That kind of scale is just immense, and it gives them some serious advantages, like in manufacturing, and especially when they're negotiating with giant retailers.
But here's the kicker. All that size, all that power, it just hasn't delivered for investors. The stock price has been stuck in the mud, lagging way behind the rest of the market. The company got bigger, for sure, but it also got slower and a lot more complicated, and that's created a massive strategic problem.
So, to really understand why this is happening, we need to unpack this key financial concept. It's an idea that's been like a heavy anchor weighing the company's value down, and it's called the conglomerate discount.
Basically, what happens is the market looks at a sprawling company like Kraft Heinz and kind of says, whoa, you're doing way too many things at once, this is too complicated, so we're going to value you less than your competitors who are more focused. It's a weird situation where the whole is actually worth less than the sum of its parts.
And you can see the real-world impact of this clear as day in the numbers. Kraft Heinz trades at a value of just 1.1 times its annual sales. Meanwhile, companies that are more focused, like McCormick, the spice company, they can trade for 2 or even 3 times their sales. That is a gigantic gap in value.
So this painful valuation gap basically forced the company's leadership to a major crossroads. They were looking at 2 completely different futures, and each one had its own set of big promises and big risks.
All right, so path number 1 was basically stay the course. Keep the whole empire together, keep that power with retailers like Walmart, and keep sharing costs to stay efficient. The big risk? Well, you'd probably stay undervalued and keep growing slowly. Path number 2 was way more radical. Break the whole thing apart. The goal there would be to finally unlock a higher valuation for the faster-growing brands, but you'd have to give up that precious scale.
So, which path did they choose? After years of struggling, Kraft Heinz finally made its choice. The company is making a huge bet that the future isn't about being big anymore, it's about being focused.
The plan is basically to hit the undo button on that 2015 merger. They're going to create 2 brand new, totally separate companies. One is called the Global Taste Elevation Company. That's where the high-growth stuff like Heinz ketchup will live, with a big focus on international markets. The other is the North American Grocery Company, and that'll manage all those stable, cash cow brands like mac and cheese.
So what's the big prize they're hoping for? The whole idea is that this split could unlock a 20 to 30% jump in total value for shareholders. Why? Because the market could finally value each business for what it is, on its own terms. That's the multi-billion-dollar carrot at the end of this very, very complicated stick.
This quote just nails it. It gets right to the heart of the whole thing. Kraft Heinz is making a massive gamble that, in the modern food industry, being nimble, specialized, and focused is now way more valuable than just being the biggest guy in the room.
Okay, but this is absolutely not a guaranteed win. The risks here are huge. I mean, how do you even begin to split up over $19 billion in debt? The split itself is going to create something like $300 million in new, duplicated costs. And maybe the most important question of all, will these 2 smaller companies have the muscle to stand up to the crushing pricing pressure from giant retailers?
So now you've seen the whole story, the history, the problem, and the massive bet they're making to solve it. We've laid out all the amazing potential and all the scary risks, and that brings us to the final decision. And as you're about to see, there is no easy answer here.
So let's just boil it all down. Here it is. On one side, you've got the chance for a huge boost in valuation and faster, more agile growth. On the other side, you have the safety and security of scale, that powerful leverage with retailers and lower costs. For every pro, there's a serious con.
So the decision is now yours. I want you to imagine you're sitting on that board of directors. Do you vote yes? Do you take the huge risk and split the company apart to chase that higher valuation? Or do you vote no, play it safe, and keep the empire together because you believe that in this economy, size is the only thing that guarantees survival? The final call is yours. What would you do?